Hello. Today we are doing the analysis of SP Apparels. It's a very good company. It's a business in the child manufacturing and it's established in 1989 and manufacturing and exporter of the children clothes. So basically they have a export in Europe, USA and UK. Now, uh, if as you can see from the screen that book value is 341, current price is 744, stock P is around 20, and return on capital employed is 14.2%, return on equity is 11.7%, and price to sales is also very less. The important thing that we should have to consider is the earning yields, which is more than the like 6% or 7%. That means we are having a good amount of margin of safety. Sorry. If we talk about the stock performance, then it's gave a tremendous amount of return because of the uh, the management is have been doing a good work to perform a company in a better and better way. The important thing that we have to look for in this company is that recently, as we know, that US put a tariff on the India and it's the 50%, and there 35% of their revenue are coming from the US market. So that's the major concern for this company, and that's why we are doing the analysis. So recently they open one subsidiary in the Sri Lanka, a country, and the important information that I want to share with you, like, is that as we know that it's a Tamil Nadu based company, and currently they are having only plants in the Tamil Nadu state. So I am not sure that you are aware about these things, but in recently Tamil Nadu government has announced these things that minimum wage rate is increased by more than 40 to 50%, which will directly impact on their cost of goods sold, on their employees' cost. And now they are planning into the enter into the Sri Lanka country, and it's a very strategic decision that they have made. Why? Because the minimum wage rate in the Sri Lanka as compared to the Tamil Nadu is like 40, 50, 60% lower than the Tamil Nadu's minimum wage rates. So I think that's the most important part that we should look for this particular company. Like, so if we can see the industry-wise comparison, then so many players are making 10, 11, 12% of ROE and ROC, which they are also making. In fact, they are making higher amount of ROE and ROC as compared to the industry. Like if you can see from the screen that in the industry, so many play in the industry, the median ROE is 11.61 and ROC is 12.9, whereas the SP Apparels making a ROE of 11.69% and ROC is 14.25%. And if we can see, they are operating on very healthy debt level. That means the debt is not a major concern for us. The major concern is the US tariff, I think. And apart from that, if you can see the last quarter's profit growth, sales growth, the management done tremendous amount of job, tremendous job. Currently, stocks P is around the 20, and which is much lower as compared to the industry P is 30. So if I talk about the little bit about the price to earning ratio, like so many peoples are there in the market who are directly comparing the price to earning ratio from the like the growth rate. And if we can see the last quarter growth is 64%, then we can reasonably say that okay, this P is not justifiable. The company deserve much higher P because of the growth rate and profit growth rate and sales growth rate and the return on equity and return on capital employed that they are generating. I believe it's my thoughts. And if you can see that uh, the kind of sales growth that they have been doing, and they are operating on a healthy operating profit margin like 17 to 13%. It's a very good number in the clothing market, because we know that clothing is a very fragmented market, and in this kind of market, they are making good amount of operating gross margins. Uh, and as we know that they are not having that much amount of debt, that's why the interest payment also much lesser for them also. And we know that in the so many countries the inflation are now in the control. That means they are not able to charge a much higher price in that countries also. So there is a one concept that I have learned from the Warren Buffett is that inflation caused the business growth in the sales and profits. Like it's because of inflation there is a sales growth happen and the profit growth happen. Because we know if there is a deflation kind of scenario or very controlled way of inflation scenario, which generally happen in the contraction economy, then then very less room for the companies to the growth. So I think that's why currently they are facing lot of problem. But in future, there may be the chance that company will do a better, because as I talked already earlier that they are planning to establish 6,000 machines. So currently they are having a total 6,500 machines, and in future they are planning to they are planning to set up a 6,000 machine in the Sri Lanka. So just assume the kind of employee cost saving will happen for them. So I think we have to look for in that scenario. And recently I read their conference call, and so many analysts focus on these things, that how these things will going to impact. And the analysts were not concerned about the US tariff, but the kind of strategic move that management is doing. Analysts were focused on that part. So if we see that last 10 years sales growth is 11%, which is very, very healthy. And if you compounded, if you see that last 10-year profit growth, it's 25%. And like it's tremendous amount of job the management have done. The 25% of profit growth, it's not an easy job to do in these kinds of markets. So I believe stock also did well in last 5 years, and I believe that this stock will give us a good amounts of return in future. By the way, the management have been saying that to set up a 6,000 machines in the Sri Lanka, it's took we will complete that project. It's around 2027, so it will take a time. It will not complete now, but it will take a time. And they have a very healthy amounts of reserves, assets. They are also buying a good quality of assets. Then so they are investing heavily because obviously they are growing at a good amount of rate, so they require higher amount of investment in the capex rather than the paying to the dividends, the things that Infosys is doing currently because they are not having a proper plan or proper projects which create a value for the shareholder. And if you can see that FII holdings is also increased, holding is also increased, which is also a good sign. So I think it's a good stop for the analysis part. It's not a buying recommendation. Uh, this is my first time, and we are just focused on the analysis. We will not give any buy recommendation or any sell recommendation. Our focus is totally on the education part, not on the speculation. Thank you very much.